What if I told you that most US dollars don't live in the United States, not in New York, not in Washington, not even inside the American banking system? What if I told you that tens of trillions of dollars exist offshore, beyond US borders, beyond US voters, and at times, beyond direct US control? There is no vault marked $80 trillion, and no official government ledger that tracks it cleanly. No election where anyone voted for this system. Yet this hidden dollar network silently funds global trade, fuels financial bubbles, rescues foreign banks, destabilizes countries, and repeatedly brings the world to the edge of collapse. Most people have never heard of it. Even many economists barely talk about it. This is the offshore dollar system, sometimes called the Eurodollar system, and it may be the most important financial structure on Earth tonight. We're going to answer a question that sounds impossible. How did $80 trillion worth of dollar money end up outside the United States? And why does it matter more than the dollars inside it? But to understand that, we have to rewind to a time when the dollar wasn't global, when America didn't intend to rule the world financially, and when this entire system was, technically, an accident. When most people think of the US dollar, they imagine something simple. The Federal Reserve prints money, US banks lend it, the government regulates it, and the system stays inside American borders. That picture is comforting. It suggests control. But the offshore dollar system destroys that illusion. Because these dollars are created outside the United States, by non-US banks, using US dollar liabilities, without direct permission from the Federal Reserve. And once that door opened, it never closed. To understand how, we need to go back not to Wall Street but to post-World War II Europe, a shattered continent desperate for stability, liquidity, and trade. This is where the first offshore dollars were born, not in secret, not illegally, but quietly and with consequences nobody fully understood at the time. After World War II, the United States emerged as the dominant economic power. It held most of the world's gold, most of the world's industrial capacity, and the only major currency trusted internationally. In 1944, the Bretton Woods system made the US dollar the center of global finance. Other currencies were pegged to the dollar, and the dollar was pegged to gold. At first, dollars flowed outward for a simple reason. America was rebuilding the world. Through the Marshall Plan, military spending, trade surpluses, dollars piled up in foreign banks. And here's the key moment most textbooks gloss over. Those dollars didn't go back home. They stayed in London, Paris, Zurich, Hong Kong, sitting inside foreign banks. At first, these banks just held them. Then someone asked a dangerous question. What if we lend these dollars out? That single decision created an entirely new financial universe. In the 1950s, European banks began accepting dollar deposits and making dollar loans, even though they were outside US jurisdiction. These weren't physical bills. They were ledger dollars, claims and promises denominated in dollars. And because these banks were outside the US, they didn't follow US banking regulations. They weren't bound by Federal Reserve requirements. They weren't limited by US monetary policy. In effect, they could create dollar liquidity freely, as long as counterparties trusted them. This offshore dollar market became known as the Eurodollar system, not because it belonged to Europe, but because it existed outside America, and it grew fast. Why? Because it solved three massive problems at once. 1. Foreign countries needed dollars for trade. 2. Banks wanted fewer regulations. 3. Corporations wanted cheaper funding. The offshore system offered all three. No votes, no laws, no grand design, just incentives. Once offshore dollar lending proved profitable, it triggered a feedback loop. More trade required more dollars. More dollars created more lending. More lending expanded global finance. US multinational corporations began borrowing offshore because it was cheaper. Oil producers priced oil in dollars and deposited revenues offshore. Communist countries even used offshore dollars to avoid US seizure during the Cold War. Ironically, the offshore dollar system helped America project power while slowly weakening its control. By the 1960s, offshore dollar deposits rivaled domestic US banking deposits. And then the first crack appeared. The Bretton Woods system assumed one thing, that the US could always back dollars with gold. But offshore dollars multiplied faster than gold ever could. By the late 1960s, foreign banks held more dollar claims than the US could redeem confidence in gold. Convertibility collapsed. In 1971, President Nixon closed the gold window. The dollar became pure fiat money. Many assumed this weakened the dollar. In reality, it freed the offshore system completely. Without gold constraints, offshore dollar creation exploded. The dollar was now global money without an anchor, and the offshore system became its engine. As financial deregulation swept the world, offshore dollars became the backbone of global trade finance, emerging market borrowing, cross-border capital flows. Banks no longer needed US deposits to create dollar loans. They used repo markets, FX swaps, interbank lending, derivatives. This was shadow banking dollar creation without traditional banks or central bank backstops. By the 1990s, Asian economies depended on offshore dollar funding. Latin America borrowed heavily in dollars. European banks became massive dollar intermediaries. The world ran on dollars, but not American dollars. It ran on offshore promises, and that made the system incredibly efficient and incredibly fragile. In 2008, the world didn't suffer a US housing crisis. It suffered a global dollar shortage. That's not a metaphor, it's a literal description of what broke. By the mid-2000s, the offshore dollar system had grown enormous, far larger than official US money supply measures suggested. European banks alone had accumulated tens of trillions of dollars in dollar-denominated assets, funded largely through short-term wholesale markets. They borrowed dollars overnight. They lent dollars long-term. They assumed refinancing would always be available. Then, suddenly, it wasn't. When Lehman Brothers collapsed in September 2008, something subtle but catastrophic happened. Trust vanished from the offshore dollar system. Banks stopped lending dollars to each other. Repo markets froze. FX swap markets seized up, and institutions across Europe and Asia realized they had a terrifying problem. They owed dollars, but they didn't have access to them. Here's the contradiction at the heart of the offshore dollar system. The Federal Reserve does not regulate it. The Federal Reserve does not monitor it fully. The Federal Reserve does not directly control its size. But when it breaks, only the Federal Reserve can save it. Because only the Fed can create unlimited dollar liquidity. In late 2008, the Fed did something unprecedented. Quietly, without public debate, without congressional votes, it opened dollar swap lines with foreign central banks. This allowed the European Central Bank, the Bank of Japan, the Bank of England, and others to borrow dollars directly from the Fed, then lend them to their domestic banks. At its peak, the Fed had lent hundreds of billions of dollars offshore. This was not foreign aid. It was emergency life support for the global dollar system. Most Americans never knew, but without it, major foreign banks would have collapsed and global trade would have stopped. The offshore dollar system survived. Barely. After 2008, regulators promised reform, new rules, stress tests, capital requirements. But here's what didn't change. Global trade still ran on dollars. Corporations still borrowed in dollars. Banks still created offshore dollar claims, and emerging markets still depended on dollar funding. The system's scale actually grew, because there was no alternative. The euro lacked fiscal unity. China's yuan wasn't freely convertible. Gold was impractical for modern finance. So the world doubled down on offshore dollars, and the risks moved further into the shadows. In March 2020, the global economy shut down. Flights stopped. Factories closed. Trade collapsed. And instantly, the offshore dollar system cracked again. Companies around the world scrambled for cash. They didn't want euros. They didn't want yen. They wanted dollars. FX swap spreads exploded. Dollar funding costs surged. Emerging market currencies collapsed. Once again, the Federal Reserve stepped in. Even faster than in 2008, the Fed expanded swap lines, created new dollar facilities, backstopped corporate credit, flooded markets with liquidity. Within weeks, trillions of dollars were effectively made available globally. The message was clear. The offshore dollar system would not be allowed to fail. But that guarantee came with a cost. Every rescue changes behavior. After 2008, banks learned the Fed will save dollar markets. After 2020, markets learned the Fed will save everything. This created a global moral hazard. Countries borrowed more in dollars, corporations increased dollar leverage, financial institutions took greater risks. Why not? The backstop was implicit. But implicit guarantees are dangerous, especially when the system they protect is larger than any central bank's balance sheet. This is where the $80 trillion figure enters the story. Unlike domestic money supply, offshore dollars aren't neatly tracked. They exist across bank balance sheets, FX derivatives, repo markets, corporate borrowing, shadow banking structures. Estimates vary, but many analysts now believe the offshore dollar system exceeds $80 trillion in dollar-denominated claims. To put that in perspective, US GDP approximately equals $27 trillion, physical US currency approximately equals $2 trillion. Official US money supply approximately equals a fraction of offshore dollar exposure. Most dollars that matter aren't American, they're global. And they're fragile. Look at what's happening today. Rising US interest rates tighten dollar liquidity. Emerging markets face capital outflows. Foreign banks struggle with dollar funding. Global trade slows under dollar stress. Each tightening cycle exposes the same flaw. The world needs more dollars when the US wants fewer. That tension is structural, and it can't be fixed with policy tweaks. You've probably heard claims that the dollar is dying, that countries are abandoning it. But what they do, not what they say. Oil is still priced in dollars. Trade contracts are still dollar-based. Debt is still issued in dollars. Even rivals of the US rely on the offshore dollar system. Why? Because it's the only system with deep liquidity, legal predictability, global acceptance. The dollar doesn't dominate because of force. It dominates because there's no substitute. That's what makes this system so dangerous. The offshore dollar system survives on 3 assumptions. 1. Trust between institutions. 2. Continuous refinancing. 3. Federal Reserve intervention during crises. If any one fails, the consequences would be global. Not a recession, not a market crash, a breakdown in trade, credit, and monetary stability. And the bigger the system grows, the harder it is to save. 3 clear takeaways. Takeaway number 1. Most global dollars are created outside the United States and the US doesn't fully control them. Takeaway number 2. Every major financial crisis of the last 20 years was a dollar shortage crisis, not a local accident. Takeaway number 3. The offshore dollar system is both the backbone of global finance and its greatest vulnerability. The dollar conquered the world without permission. It spread through incentives, not empires. But systems built without design are hard to fix. The next crisis won't come from nowhere. It will follow the same pattern. Dollar tightening, liquidity stress, emergency Fed intervention. The question isn't if it happens again, it's whether the system will be too large to save. If this video changed how you see money, banking, or the global economy, subscribe for more deep dive financial history and system level analysis. Leave a comment with one question. Do you think that dollar system will survive its own success? And share this with someone who still believes money is only printed at home. Because the most powerful dollars in the world were never meant to exist.